If you've never been scammed, you could be luckier than you think. An increasing number of us are falling victim to scams, and crypto has been a breeding ground for them this year. So let's talk about scams and how individuals using crypto have been targeted all over the world in 2022. Almost 20,000 financial fraud cases were reported in the first 9 months of 2022 in, for instance, Hong Kong. Victims lost a total of over $400 million as a result. Blockchain analysis firm Chainalysis reckons $1.2 million worth of Ether was taken in scams in a very short period before, during, and after the merge. And in the US, the Consumer Financial Protection Bureau recently said that fraud, theft, account hacks, and scams led their list of crypto complaints. So what's been going on? Well, one of the most common scams that we've seen this year has been something called pig butchering. After gaining a victim's trust, individuals are offered something that appears to be too good to be true. Here's Henry Chambers from the Hong Kong chapter of the Crypto Fraud and Asset Recovery Network.
This is typically where individuals are approached either on WhatsApp or on LinkedIn. They're looking to say, well, they make a genuine relationship first. They don't talk about cryptocurrency, but once they've built somebody's trust and they've started to become part of their network, they then start to introduce the idea of cryptocurrency investments and the chance for them to make it big.
This sort of scam has caught up even the most savvy. One recent case involved the vice president of a listed company in Hong Kong. What turned out to be a fake crypto investment app ended up costing them $2 million. Now, a key reason for crypto becoming such a breeding ground has been the pandemic. Many more of us began working from home, spending much more time online.
Everyone has shifted digital. You have, certain types of services like crypto, which has always been in the digital space. The banking, for example, everyone was moving online. Everyone was looking to shop online with e-commerce as well. And that presents opportunities for the fraudsters and the cyber criminals.
March's Ronin network hack remains the largest crypto exploit to date. The attacker made off with crypto worth something in the region of $625 million at the time. According to blockchain security firm Slowmist, it all happened because the hacker discovered a backdoor and gained access to 5 private keys. Stephen says the biggest shift LexisNexis saw is from simple identity theft to scams. He says the most interesting aspect is that most of the scammers aren't lone wolves. Instead, they're seeing fully fledged scam centers aiming to steal your cash, springing up around Asia.
You have to focus in on the weakest link, which unfortunately is us now. And part of it is also, I think, that the criminals had some time during that pandemic to actually reassess how to go and attack organizations and us consumers. Scam centers in Cambodia and other places where, they're really almost factories of people here targeting the region with different scam stories.
These scam factories aren't just cheating you out of your money, though. They're also engaged in something much darker. Forced labor, and in some cases, slavery. Take a look at our previous episode for more on this. A key reason for their success has been how they've been able to talk to you in your own tongue.
People are attacking you in your local languages. Scams used to be maybe more of an English language problem. As soon as you kind of went into a foreign language, it was even more obvious of the spelling mistakes and things like that. But scammers are being professionalized. So, and that then opens up markets in Asia who perhaps historically weren't attacked so much by scams either. So that's another trend we're seeing, is that scams and attacks are cross-border in ways they never used to be.
Regulators have been making some moves to protect crypto investors. Singapore's de facto central bank, for instance, is one example. Back in January, it banned crypto firms from advertising in public places or promoting their services using social media influencers. However, Caroline Malcolm of Chainalysis told Forkast the scammers remain one step ahead of regulators and law enforcement.
The reality is that as long as there's value in this space, there's going to be attempts to access that value. And if we think about scams in particular, what we're really seeing is, a much quicker turnaround. So scams last for a shorter amount of time. And I think that's really due to a much more close attention to these issues by law enforcement to make sure the scams can be shut down as quickly as possible. We're actually being able to see them act more quickly and in a more coordinated manner, including across the globe.
Criminals, of course, exploit any kind of loophole they can find. That could be anything from stealing your data to pulling the rug from under you. Investors lost almost $1 million in August after the NFT exchange platform SudoRare disappeared overnight. Whatever it happens to be, fraudsters will always find the weakest link.
We see crypto being attacked hard. Virtual banks that have started up over the last few years in different regions, they're absolutely a target as well for the same reason. Digital services generally, from a business point of view, the focus obviously is on new customer acquisition. You need to build your business. Fraud maybe isn't always the first thing that people are thinking about, or it may not be, the area that you have the most experience or expertise in as the organization. So again, from a fraudster point of view or a cyber criminal point of view, that makes them very interesting.
The crypto industry remains very new compared to the traditional financial world. The collapse of FTX in November provoked a number of exchanges to move closer to the old world by being more transparent. Binance, OKX and KuCoin were among those promising to publish proof of reserves in response. While regulators have been playing catch-up with the rest of crypto, the signs are they may finally be getting there.
We are seeing enhanced measures, for example, simple things like code audits increasing, which actually reflect, that understanding of the importance of the sort of technological cybersecurity in this space. And I think that's true in the area of crypto, but also in technology more generally. Our research has found that hackers have grossed over the $3 billion across 125 hacks in 2022 alone. So this is not a space that we're seeing a meaningful decrease in as yet.
Adopting a local or global approach can also be key, and some reckon regulators need to focus on what's happening closest to home rather than looking around the world.
If we look in the US or the UK, historically, user experience when accessing digital services was always key. Username and password, anything that would let me get in very quickly would generally be the right approach. If we look in Asia, it's historically been slightly different. Asian fraud rates, certainly in some countries, have tended to be very low on the digital side, because it's been less of a focus on user experience and more a focus on, if we get really strong authentication in place.
Caroline agrees that stronger legislation is required, but reckons careful consideration is required too, along with one additional element.
I think the most important thing, though, is really to build education in this space, and ultimately for governments to introduce comprehensive frameworks. So legislative frameworks that only address one specific issue, like money laundering, are not going to be sufficient in achieving the policy objective of having a safe space for the innovation that crypto and blockchains actually bring. And having more comprehensive regimes that look across all of these policy issues and actually seek to address them as a whole is really the key to making progress.
Stephen thinks regulators also need to be pressuring businesses into helping customers more.
If regulators do put a bit more pressure on organizations, then it will make them think beyond just their traditional authentication layers to getting further fraud prevention layers in place that can help us as the ultimate consumers, maybe get a warning if suddenly a lot of money is moving from our account or something unusual is happening that we wouldn't normally do.
Whether or not stronger regulation comes next year, scams will continue to proliferate and continue to improve. While the risks have been higher for many of us, however, crypto very clearly continues to evolve. And 2023 might just be the year it makes that next big leap. It has been a momentous 12 months for the crypto sector, and we at Forkast have been trying our best to cover everything that's been going on. If you like any of the content, please hit that subscribe button and please share it. It means a lot to us to be part of these conversations, and we really, really want to hear your thoughts as well in the comments or on social media.